Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, kind of mixed results here again. What we've been seeing is what we continue to see here, which is the Dow and the Russell positive, S&P somewhat flat, and the NASDAQ weak. In fact, actually the Russell posted up into new all-time highs today alongside with the Dow, so big moves. We have crude coming off some important levels here, gold hanging out at some critical levels, looking like it might touch down to the 1200 whole number, and we've got the bonds selling off, continuing that trend that we've been seeing here for several months. But as always, we're going to hop over to the S&P 500 dailies. So folks, some of the things that I've just been talking about here, again, ever since the election, post-election, some of the positive things that I do like about this market is the fact we've broken some descending trend lines, we've broken some prior support levels, and we've also managed to stay above these 50-day averages, that red wavy line there. One thing that I am looking for the market to do, and I kind of think that this action here so far is perfect action. We had a strong rip off the lows, and now we're sort of consolidating right below these prior resistance levels, right around the 2180. If you remember how we traded back in the Brexit, that was kind of the same thing. We were looking at the 2120s at that time. We had a sharp knee-jerk sell-off, an equally sharp rally back, and then we consolidated for a few days before we tried to make that attempt up and over the 2120s. That was back in June. I kind of had that same feeling right in this area that if we can just go sideways for a few days, that it will let a lot of the charts set up, form nice handles, and then allow them to break out down the road, which might propel us to all-time highs on the S&P. The NASDAQ, however, still having some trouble, still not able to really break out over any prior highs. That's why you've got a bit of this descending trend line. You're hanging out below the 50-day moving averages here, and look at that relative strength, right? Very weak relative strength. That's indicating that the likes of, the Facebooks, the Amazons, the Googles, and the Apples all getting sold off, this huge rotation out of the big cap tech names into some of these more smaller or infrastructure related plays, especially financial as well. All of those catching a nice bid over the last week and a half or so. Actually, just noticing here that the Russell posted new highs. If you take a look at the Russell, new all-time highs, in fact. If you take a look at the Russell on a weekly chart, let's go ahead and just readjust this here. Right here, we posted new all-time highs here on the Russell, so that got up and over the highest point we've ever been on the Russell. We've been noticing that enormous amount of relative strength coming in here. Look at the volume coming into the Russell. Also, the Dow Jones posting up into new all-time highs as well, almost getting up to the 19,000 whole number. Again, look at the relative strength here. So we've definitely been seeing here that the tech has been selling off and that the infrastructure plays have been the ones being bid up. And as we've been mentioning in the prior videos, one of the things that we've really focused on very heavily here is just relative strength. Because here's the problem that a lot of traders run into is they get comfortable trading a certain genre of stock, whether that's tech stocks or biotech or whatever it might be. And if all of a sudden some of the stocks start to underperform and there's a rotation out of that sector or that industry group into something else, really what we've been seeing here is the likes of like the infrastructure plays. Here's where the bids are coming in at. Steel stocks just on fire, getting an upgrade from Morgan Stanley on the entire sector. We've talked about this. This has been a prior daily stock picks type stock. Steel Dynamics is one. Even U.S. Steel here getting up and breaking out on a bit of a gap here. So across the board, we're seeing different dynamics at work. Look at the XLF here, the financials ETF. Look at all of the JP Morgans. All of these stocks, this is where the trades are happening, and it's all predicated on high relative strength. We even had a couple of biotech stocks that we took here in our room. FPRX is one of them. This was a nice trade. We've already locked down some profit in this one. Another stock here, high relative strength, trying to break out from some prior highs in this area. Look at the relative strength coming up. Okay, this is why we focus on these names, because if you're always watching the top relative strength names, the top 10% or the top 5% of stocks in terms of relative performance, you're always going to be looking at the stocks that are being rotated into favor, right? Those are where the stocks are, or the big institutions, should say, are bidding up those stocks. Here's another one that we just happened upon today, which is ELF. ELF is a cosmetics company. Again, the way you take these trades is as they're starting to break out to highs, just kind of showing you here. We took these right over the prior highs from Friday, and about 15 minutes later, we got a nice little pop here, $2 pop. We got some scale out sells. So again, when you look at the markets, it's very important that you use some kind of a screener or filtering software that can help you zero in on the best relative strength names, because right now there's a lot of shifting that's going on in the market, and if you're still relying on those tried and true names that worked maybe 6 months ago, you might find yourself trying to swim upstream and really fighting the trend that's occurring in some of these bigger cap names. Just a quick look across the board here as we take a look at gold hanging out down near the 1220. So again, we've been looking at the 1200 evens ever since it broke down below that support level at 1250s. The crude here finding pretty decent support, a bit of an undercut though underneath those 43 evens, got all the way down to like 42 20s before rallying higher, and then finally the bonds here pushing lower. And as we've been mentioning here, the 10-year yield's just on fire. That's been a big benefit and a big boost to the XLF type names, the banks, the insurance companies. And in fact, when you take a look at a lot of the breakouts that have been happening, look at this, like PRI, right? Look at this huge breakout. And really, this is where a lot of the bids are coming in. EVR, this is an investment firm. Charles Schwab is another one, right? These are all stocks breaking out, and it's because of the move in the interest rates, and we're seeing this via the relative strength of these stocks trading up near highs. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that show more right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.